not a dividend.
It's a tale of two clans.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
I like that ETH is the ultimate Ponzi.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to the Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. We're doing a special late night episode. It is midnight here, and we're all very tired. But we didn't have an episode for the Chopping Block this week, and so we thought we would record something for you. First up, we've got Tom, the DeFi maven and master of memes. Next, we've got Robert, the crypto connoisseur and captain of Compound. And we've got Tarun, the Gigabrain and Grand Poobah at Gauntlet. And you've got myself, I'm Haseeb. I'm the head hype man at Dragonfly. So we are early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So we're coming at you late at night. How are you guys doing on this very late, very
Well, I'm a long-time
evening?
listener, first-time caller, just really excited to be here and chop it up.
I just hope Tarun gets his pizza. I'm worried about him and his stomach. That's kind of my big.
I did dye my hair at least one of the colors that won the poll. So,
Which color won the poll?
well, first of all, half of my head was shaved,
That's true.
But
There was
meant-
one that shave it off. There was one that shave it off won.
and
so
I
I'm
think
glad to see
orange
that.
or green won. I forget which one. So I had both. So
It's a strong choice. It's
Very nice.
It's max cypherpunk right now.
yeah.
I'm glad that you're deferring to the chopping block DAO, unlike Arbitrum. I feel you've learned a lesson about on-chain governance, which is very good to see.
I don't want Gary coming after me.
I know. That's right. Well, so this week, the news this week is all about regulation and legal stuff and Congress and people yelling at other people for being securities. Honestly, it's all kind of boring. And we were talking about like, hey, do we have to do another episode about more kind of legal naysaying? Like, there's nothing that important that happened this week. And we're also pretty tired. It's just been a pretty grueling week as well. And so we thought maybe we'll shake it up today and try a little bit of variation in format. So instead of just rattling off the news and giving you vague opinions about them, we decided instead we're going to try something different. So Tom, what's on the menu tonight?
So this is actually inspired by a tweet by Hildabi, who is our data scientist here at Dragonfly, where he had a nice little dune chart, but with some of the key information, such as the title, scrubbed out, and people just guess what the chart was. And so we're going to play a little guess that chart right now. So apologies to any audio listeners. We'll try to get some nice descriptions of what the chart depicts. So are you guys ready?
Do you guys know what GeoGuessr is?
I've been following.
Yeah, of course.
Oh,
Of
I've
course.
seen that. Yeah.
We're basically this is the on-chain GeoGuessr.
A little bit.
For anyone listening, Tom has the charts. Haseeb, Tarun, and I do not know what chart he's about to put on the screen.
I don't
That's
even know
right.
what chart I'm about to put on the screen. But here we go.
All right. Let me see if I can describe this chart. So the chart,
Oh, this is transaction fees per chain.
You're so confident.
okay.
No,
So the
not
chart,
quite.
okay. So the chart is, it starts in January 2020 and it like shoots up basically up through July 2021 and then comes down quite a bit in January 2022, comes down again in the summer and then like kind of hits a local bottom around the beginning of 2023 and then starts going back up again. The biggest contributor is Ethereum by far. Then there's BNB Chain, then Polygon, then Arbitrum, and Avalanche, Gnosis, Optimism. And there's like tiny, tiny little contributions from everything that's not Ethereum.
Right. And the key thing here is that, okay, so I read too quickly. I was trying to do GeoGuessr style. I am not rainbow.
It's in black and white and it's
Yeah.
pixelated, so you might not be able to.
So the y-axis, it goes up to 1B, and halfway up there it's 500M. So we're going with like 1,500,000,000. All the different chains are shown, but Ethereum is like 99% of this chart. And there's like a little bit of activity from like whatever's
BNB
picked,
and Polygon,
BNB
yeah.
and Polygon. But it's basically a chart of Ethereum
Yeah.
in the last
So
3 years.
basically, okay, something that daily maxes out at 1 billion and now is somewhere around 250 million.
Could it also be stablecoin volume?
I think it's way higher than that. Like,
No, because there's no Tron on here. Tron has
Yeah,
got to be
Tron
a huge
should be-
representative
right,
here,
right.
right? And it's not even on this
Do
chart.
you guys want a hint?
No hints. No hints.
no,
Screw hints.
if we don't get it in 1 minute, you're going to explain this to us. And at the end, you're going to
Yeah.
educate the listeners on why this chart's interesting
Yeah, I like that.
because you picked it out.
I'm going to guess that it's transaction fees.
That was my first guess, and I know I'm wrong.
I'm
Because
gonna
there's
guess
no
it's
way that there's
transaction
a
fees.
billion of transaction fees a day.
Yeah, that doesn't seem right. Total fees paid, maybe? I don't know. Maybe that does seem too high.
Yeah, total.
Is it maybe it's issuance?
No, 1 billion issuance a day, that doesn't make any sense.
Yeah.
Could it be
way
like
too high.
native assets moved? Like the value of the native, like the value of ETH, value of BNB, value of Polygon moved per day?
Bad investment decisions per day.
Well,
lock that in.
I mean that billion a day must be Anchor then.
Yeah, that's the peak. No, your time is a bit off, Tarun. You gotta look at the time series down here. Sure, no hints.
All right, one
Oh,
hint.
his last guess is
Okay,
one hint.
give us a hint. We're clearly way off. Give us a hint.
It is a TVL metric.
A TVL metric. Daily per chain.
Bridge activity, maybe per day.
Bridging in? Assets bridged in per chain? Bridged in and out? TVL metric. TVL metric. Maybe like borrows? Like daily borrows? Borrows and
No, that bar's got to be less than that.
Yeah.
All right, I formally concede and give up on this.
Tarun, any last guess?
Go for it.
All right, what do we got?
Puzzle Master stumped us.
This is Hildobby. This is Tornado Cash TVL by chain.
Oh wow.
You see that big drop in August when the sanctions hit. So we did come back to regulation a little bit. Sorry. And then these other chains sort of popping off. Obviously, it's highly correlated with the price of Ether, but you kind of see, it's like
I think the
Ethereum.
daily per chain really threw us off. The daily per chain really got
That's
us
true,
off
that's true.
track.
TVL and daily don't go together. That is
Exactly.
true.
Yeah.
I'm going to give this feedback to Hildobby.
So actually, one interesting question to me is, where is the BNB bridge hack? What do you remember when that was? Because I'm curious if you notice the BNB percentage is going up toward the last.
Yeah.
I'm
wondering if the BNB bridge hacker is part of the reason for the.
Well, the BNB part also does look pretty stable, actually. And so I think it was just that's when BNB launched, because initially it was Ethereum only. It doesn't look like BNB grew or changed that much. It grew a little bit, I think, after July, ironically after the sanctions hit. But overall, it's I think around the same slice.
That's natural though, right? Because the BNB deployment was not sanctioned, but the Ethereum deployment was, which doesn't really make a lot of sense. So
True.
Yeah.
Oh, I didn't think about that. It's the only legal place where you can interact with Tornado Cash is on BNB chain.
legally, yeah, sure.
it's not illegal, or it's not legal. Yeah.
Okay, understood.
OFAC loves Binance.
Yeah. I think they're trying to advantage foreign actors.
So there we go. That was one. Do you guys want to do another one, or was that too painful?
Let's do one more. I'm sure the audio listeners are loving this, by the way. This is a very audio friendly format.
There's going to be a lot of editing for this.
Yeah, hide your private key, Tom.
Yeah, there's a big hack going around, or
It's
some.
true. It's
big,
Should we talk about it?
Can we talk about the Ledger ad, the chain thing?
Oh, yeah, where Ledger is telling you to buy a new jewelry necklace and hang your Ledger wallet around your neck.
That
Here we
might be
go.
the greatest guerrilla marketing ever.
Okay.
what are we looking at?
This is a time series with a bunch of layer ones on them from January 2022
Layer twos.
to April 2023. Yes, we have Arbitrum, Starknet, Optimism, Loopring, Aztec Connect, Polygon, ZK EVM, ZK Sync Lite, ZK Sync Era. And then trend-wise, it's kind of neck and neck, Arbitrum and Optimism, both hovering around this in aggregate, about 2K, each contributing about 1,000, kind of dips during the summer of 2022. And then going into 2023, start growing again, Arbitrum growing a little bit more, and some of these other layer twos contributing more to the pie, exceeding 3K in March and April 2023.
All right, so this looks like a TVL of layer 2's chart, except the units are off, right? The units go from 0 to 3,000.
That's correct.
Maybe it's like TVL in Ether terms. It's like Ether TVL.
Number of smart contracts deployed.
Yeah, or daily users. No, the daily users higher than this, right? So,
Yeah, there's at least
Daily, that's too low for daily.
Yeah.
3,000 is definitely a lot more than 3,000 dailies
also
for.
there's a lot of activity in the most recent month on ZK Sync.
Well, ZK Sync grew in TVL a lot, so they're like at 250 million
That's
now.
also where all the people are trying to airdrop farm the most.
Oh, speculative airdrop.
Yeah, speculative airdrop farming. Yeah.
It looks very proportional to TVL. So there's something that is feeling correlated with TVL, but is very different units.
Active developers.
GitHub commits.
You can't track that on Dune. How are you tracking that on Dune?
All right. That's a good meta argument. Good meta argument.
There you go.
The only reason I'm not sure about whether this is total amount of ETH is that not all of these chains pay gas and ETH, if I remember correctly.
No, it can't be ETH.
But they got to be moving.
I don't think
ETH.
it's. They can be wrapping ETH.
No. Yeah, this is way too small.
Keep pulling that thread. Keep pulling that thread.
Tarun, pull the thread.
This is like a chart murder mystery that's unfolding for our audience in real time.
I'm like the dungeon master right now.
Yeah.
That's good.
Roll a d20 and see what happens.
Is it inflows? Maybe it's like monthly inflows, because all these, I think that numbers have been going up basically pretty continuously, but no, that doesn't make any sense. Maybe it does.
September 22 is sort of like the bottom of this chart.
All the Solana TVL clearly moved here, wherever, whatever this is.
Because so 1K Ether is like $1 million. Like that is not,
too small.
It's way too small, right? So like, what is this 1K thing? Is it bridge-in events? Maybe no, that's too small. Like
I do kind of like this new contracts deployed or number of contracts interacted with or something. There's that like kind of could be in this range.
Contracts deployed does make sense. Unique contracts, maybe
or contracts touched per day.
You can do contracts,
You can count which contracts were touched, and maybe this is bridge contract. Like
I was going to make a joke about where Tarun touched the contract, but it's not funny.
All right, I'm going to go final answer, unique contracts interacted with per month.
My guess is going to be number of contracts deployed per month.
My joke guess, because I sort of think it's one of the latter two, is number of rug pulls per month.
That is correct, Tarun. It's number of rug pulls per month. No. It's cost of publishing transaction data to a layer 1 by the layer 2s per month.
What?
Yeah.
Wait, what?
I was thinking along those lines, but I was like, I don't know if they would actually be able to get that.
The total price paid in aggregate of posting call data to layer 1 over that month.
Correct.
I see. Okay, so that's actually quite interesting.
Are we saying Celestia is going to be getting to a 3 million run rate per month?
Well, no, the price would be much lower, right, for the same amount of demand. Just to get the benchmark numbers right now, because it's actually kind of interesting. If you go back, I think it's about 1,000 on Arbitrum. So Arbitrum's paying about $2 million a month to post call data. Optimism posting.
Right now it's 1,800, so almost 4 mil.
Oh, okay, wow. So closer to 4 mil per month. Optimism is about 1,000, so that's about 2 mil. And Starknet 93 ETH. So that's like what, 100K or something, or 200K.
That's the deal.
Fascinating. And what's ZK Sync?
Yeah.
Okay. Whatever.
ZK Sync is at
500.
Yeah.
Era. So Era is at 500. Okay.
By the way, we should maybe explain what these payments are for. Layer 2s have some state management that they have to do in the layer 1. The sequencer, who's managing the state of the layer 2, has to post storage calls and other types of calls if there's a fraud proof, but there's not in any of these. And so that's what Haseeb was referring to as call data, is sort of the data that they have to post. It's kind of interesting that ZK Sync had like such high cost growth relative to Polygon.
Polygon still has very low usage, I think. ZKVM, I think their TVL is like 30 million or something compared to ZK Sync's like 250 million. But I mean, all of these are like super young still.
Here's a trivia question for you. If all of these L2s are spending about 3,000 Ether a month on the L1 Ethereum, what do you think the total Ether spent in transactions on the L1 would be in the absence of all of these L2s?
The question, like, how much are they siphoning demand from the layer 1?
Yeah.
I kind of believe in like the induced demand theory, where it's like a lot of the shit that's happening on layer 2s is like goofy like NFT stuff for people that like would probably not happen, on Ethereum today at these gas prices. And so it's like you actually just capture this new market that would be priced out otherwise.
It can't be that there's nothing siphoned, but there obviously is some new activity that only makes sense at a lower price point.
Of course.
It's funny. I was getting in an argument with Kalsamani about this over Telegram, which is always the best place to have arguments.
He's a big layer 2 token bull short ETH.
Yes, he was making this big argument that like the trade to do is to go long the L2s and go short Ether. And he thinks like the L2s are going to siphon all this, they're going to like suck up all the value because ultimately they're closer to the user and users are going to interact more with L2s. And basically like ETH, like the floor is just going to drop out from under it because it's ultimately the L2s that are going to be valuable because they're directly user facing and they own the applications. I thought this was kind of nonsense. And so my counterpoint to this, well, first of all, I'm curious, does that hold any valence for you guys? This idea that the layer 2s are actually potentially going to accrue more value than the layer 1? If like that's where the applications live, that's where all the users interact with?
It's possible. I mean, I'm not going to say that his theory is automatically a good one, but if the applications are living on the L2s, and to Tom's point, you can have applications that couldn't exist on the L1s, then there'll probably be a lot of value accruing to the L2. But is it stealing value from the L1? Is it adding more usage and importance to the L1? I don't know. I mean, with the switch to, full proof of stake, you could also argue the exact opposite, is that the L1 is the economic security for all of the L2s, and it will be significantly larger.
Another thing to consider here is the main layer 1s themselves are actually quite worried about this. And there's been a bunch of designs of things where the fees from the L2 flow back more to the L1. So there's a thing called a based rollup from Justin Drake. And the idea is basically to have some revenue share between the L1 in ETH's case and the L2s, and sort of like trying to force that. So it is interesting that there's some of the ETH researchers are actually sort of in the Samani camp that the L1 needs to get some revenue from the L2.
I would say that if you believe that's true, right? If you believe the L2s are siphoning value from the layer 1, then that means it sort of implies that you should also believe that Lightning makes Bitcoin less valuable, because Lightning is ultimately siphoning transaction fees from the layer 1. It's got the same kind of substitution effect, which makes Bitcoin less valuable.
That would be true if Bitcoin had transaction fees.
Yeah, I was about to say the same thing. Yes, but
it's supposed to, right? It does. And ultimately, like Bitcoin is used to pay fees with.
But you don't really use it for like data availability in a dynamically posted manner like you do with Ethereum, right? Like Lightning transactions are like, I do a time lock at one point and I close a time lock another point. Everything stays off chain. There's not as much like dynamic state updating. I mean, there's basically none. There's like 2 UTXOs.
Sure, but it is in the end siphoning demand for layer 1 transactions, right? Like otherwise you'd be directly transacting on Bitcoin if you couldn't use Lightning to settle Bitcoin.
That hasn't been Bitcoin's problem for years, though.
I agree. Look, I'm not arguing that's Bitcoin's problem, but I am saying that if you are going to be consistent with that view, that a substitution effect for demand for transactions lowers the value of the underlying layer 1, then you should believe that Lightning drives down the value of Bitcoin. And that doesn't seem plausible to me. The other thing, of course, that on these layer 2s, Ether in its sort of cash flow element, which is just how much Ether gets burned because of transaction fees on layer 1, but then there's also the element of Ether as a form of money, which I would argue today is where the lion's share of its value comes from, just because the transaction fees demonstrably are not that big. And on the L2s, like ETH is money on all the L2s. ETH is what everyone uses. People don't use wrap Bitcoin. They don't use ARB token on the layer 2s as their form of money. They use Ether. And so if anything, these are etherized economies that are actually expanding the universe through which Ether is used, right? In the same way, like, look, there are many ways to make the dollar valuable. One way is to grow the GDP of the US economy. Another way is to increase the tax rate. Another way is to get other people to use dollars.
Do you think ETH held on layer 2s is like a euro dollar? It's sort of like
yes, totally.
deposits.
That's a great analogy. That's a great analogy.
Yes, but only if the time and cost to bridge is full of friction. If it's literally extremely low friction to move Ether in and out, then it's the same asset.
I agree with Haseeb's bigger point here, which is like, if you think about what factors go into Ether's value today, it's like 95, 99% this moneyness, and then like a small percentage sort of the transaction fees and the burn and a lot of the economics that go into it. And it's like, crypto people always sort of fall for this. Oh, well, like this asset has these flows and like, let's do like a discounted cash flow analysis. And it's like, maybe that's true for a very small number of assets, but for the most part, it's sort of this other thing.
I mean, one question, and I was talking about this with a bunch of people working on who believe in the like there will be 5 million rollups world. How does the user end up managing the UX for this? Like, none of the wallets that exist can really handle multi rollups right now at all. Like, it's so clunky, right? You're like going in, changing RPCs. Some of them make you pay gas in native tokens. Some make you pay in ETH. Some, like that part is still very confusing to me. And that's where I kind of can agree with the Solana maxis of like the UX is much easier in monolithic for the wallet.
Yeah. This is not a dunk on Cosmos, but I personally find the Cosmos ecosystem UX with multiple different chains to be like literally impossible as a user. I think to Tarun's point, if you have, 1,000 L2s, it's going to be the same user experience where it's like, yes, it's possible to move between any two of them and like all of these things, but what wallet software is going to make this easy and intuitive? And like, how are you going to do it? Like, it's already hard. Like my network drop down, just on the EVM chains in MetaMask is like too long.
And if you think about it, there's like, in venture land, there've been sort of tens of companies founded for doing roll up as a service so that developers can start their own roll up like the way they start an Amazon Web Service. Great. You can make your own blockchain easily. But then it's like no one is really funding like wallets focused on, or like even just like some layer for making it easy for the end user. So I think that's going to be a big thing now.
Part of I totally agree with you, Tarun. We funded a company recently called Caldera that does exactly this, does like layer 2 as a service. The difficulty, like you said, is that getting a bunch of layer 2s up and running, now it's kind of doable. We have the open source stack. Obviously, Optimism is today the kind of hot stack du jour that people are using. But actually managing assets across a cajillion chains like super sucks. And of course, we just had tax day in the US very recently. And obviously, like if you're trying to pay taxes across assets in like 16 different ecosystems, it's a horrendous task, much less just being able to manage your own assets across all of them. And so I do think that at some point when the landscape settles down and the number of stacks settles down, there are definitely going to be software solutions that pop up that start to get smarter about managing your assets, what you pay gas with, meta transactions across different chains, like consolidating assets for you, and also helping it making it easier to do accounting across all your different chains. That stuff will come up as the kind of space of chains stabilizes or the number of stacks stabilizes. But right now, there's still like super high flux. And so anybody who's like, I know exactly what I'm going to build for, I think people still don't know. Like it's still very much a moving target. A lot of people are like, okay, well, Solana's winning. I better build a bunch of tools for Solana. Or other people were like, oh, well, Cosmos seems to be taking over the world. I should build for Cosmos chains. And now rollups are the thing. It's like, okay, should I build this tooling for rollups? I think if you give it a couple years, we're going to see some stabilization in the chains that people use and like less turnover in the top 10 chains by TVL. But over the last couple of years, it's been so volatile. Like, I don't know how you would know what to work on.
My suspicion is that there will be a lot of venture funding going into the moving up the stack. Like, there's been so much money focused on infrastructure in the last 12 months. And like, people are going to be like, oh shit, we actually need to really fund like the basic, new wallets and stuff like that instead of, because like, it doesn't feel like the existing wallets are willing to change their experience enough to handle this type of world.
Part of it is fear too, right? Like the deeper you get into the guts of making decisions on behalf of users, the more risk there is for mistakes, for hacks. There's just more surface area to like mess things up. I mean, there was all this news this week about like really crazy hacks that nobody seems to know where they're coming from. Taylor Monahan, who was on the show recently, was talking about this like crazy web of old addresses that don't seem to have any ostensible connections to each other, many of which were super sophisticated, quote unquote, cold wallet, quote unquote, addresses that have been just getting swept by the same attacker. So I've been getting more paranoid over the last month, I guess. I don't know if you guys are feeling similarly, but more and more I just get paranoid about like, I don't know, attackers are getting better and smarter and more sophisticated than before.
Well, they absolutely are. I mean, the underlying technology of security is not improving, but there's more sophistication outside that is improving. We were joking around about, Ledger putting a really stupid ad on Twitter of like, buy the necklace keychain for your like crypto hardware wallet. And that's like, obviously like security moving backwards, but like security in my mind is moving flat. and there's more sophistication around how to break security every single month. And I think a lot of it falls, is rooted in human error in a lot of places. And I think a lot of it's in exposing 0 days, so to speak. But, I definitely think that over time, security is not fundamentally improving, and there's not enough work spent on fundamentally improving the security architecture of crypto.
I also think that large language models are going to be really good at attacking contracts. And they're going to be I think the natural advantage to attack versus defense is going to grow with large language models. Because I think it's a lot easier for a large language model to find a vulnerability than it is for a large language model to fix a vulnerability.
Finally, the Cardano stands can win.
Wait, what? Why?
Formally verified.
Oh, I see.
Peer reviewed, formally verified.
Okay. Got it. Well, that's Cardano itself, right?
Yeah. Well, the programming language that no one could use, and at one point only had one transaction per block because the EUTXO thing was messed up. But yes, Cardano.
Okay, Cardano.
These charts seem to have brought out the animal spirits. So what's the next one?
They're doing a good job of waking us up.
I didn't know you guys wanted another chart. All right,
chart number 3.
It's it's kind of like one of those Rorschach tests where you look at a chart and it brings up all the stuff inside you.
That is true. That is true.
Yeah, I like it. I feel like this is a good psychological test for how you feel about crypto.
Yeah, it's the least fun party game that you can try at home.
You have no idea what Tarun's parties are like.
Did we need a disclaimer for the listeners to trigger warning? We're going to be playing the worst party game, but we're saving you from playing it. Do not attempt on your own.
I actually would be super down for this party game if it was actually like a party game.
I mean, we're 4 crypto venture investors. We're I think some of the only people that find this amusing.
Okay. I think I got a new one.
Yeah.
Actually, this one I don't even have the labels on it. Are you gonna be okay with that? Is that gonna be too hard? Otherwise, I think it's too obvious.
Hard mode.
Let's go. No labels. I'm feeling risky tonight.
I will say one thing. My first boss ever, very nice guy, this billionaire. The one thing he would fire people for on the spot was no units on their labels.
That's legit. If cumulative time series, no units, fired on the spot. I'm okay with that.
So if it just said 100, 200, 300, he was you're fired. Leave.
Yeah.
All right. So is Tom fired?
This really is a party game. Wow. I mean, no, there are units on the x-axis.
Yeah.
All right. Let's describe the chart so the listeners can understand what we're looking at, because we all just said whoa. So the chart starts in January 2009. So my hunch.
So this is called a whale fin chart. I believe that's what this is called. Or shark fin chart.
My hunch is that we're thinking something in the Bitcoin ecosystem because the chart starts in 2009. And I don't think we would go all the way back if we weren't.
Very astute observation. Very astute observation, okay. Robert.
So it looks like there's no activity for 2009, 2010, 2011, 2012, 2013. There's basically no activity on this until 2019. And then it starts to go way up. It peaks in November 21, December 21. And then it goes back down to about half of its peak. And it looks truly like a shark fin. It's very symmetrical. It almost looks like a normal distribution.
And there's also 4 colors, but we don't have the legend. So we don't know what those 4 colors correspond to, but it's mostly one color. It's 90% one color.
Yeah. Okay. We were talking about lightning before. My hunch is that this is a chart that has something to do with lightning or a Bitcoin type of transaction.
Number of lightning nodes by client.
It could be, it could be based on client. It could be
300,000 lightning nodes. It maxes at 300,000. That's too many.
It could be a SegWit thing.
Well, the SegWit was 2017.
Yeah, I don't know. Okay, I'm just throwing ideas out.
No, but actually, I remember Binance only supported SegWit deposits and withdrawals in 2020. I remember there are a lot of people on Twitter or Bitcoin maxis complaining and yelling at CZ about this.
Yeah.
Yeah, but the chart looks like 0. It doesn't even look like...
It does. The chart looks like 0 until 2000.
How about number of channels instead of number of nodes?
I can see channels. I think channels makes sense.
But channel by client? That's what I'm trying to figure out.
Or maybe by capacity of the channel. And gray is 0 to 100 or something. And then
300K BTC is 1.5 billion.
No. I'm saying that it's the number of channels, but the colors are the capacity of the channel. They're like class sizes, right? So like small, medium, big.
Has Lightning capacity ever been over $1 billion? Because 300K BTC is a lot.
No. I'm saying the units are not
way
BTC.
smaller.
The units are number of channels.
Oh, number of channels.
The colors are corresponding to the size of the channel.
I don't think there's that many channels. That's a lot.
I don't think there's that many channels either. Because aren't most of the channels like bit refill and like nothing else? That's what I remember.
Yeah, I mean, it goes up to 300,000 whenever the...
Also, like, what's this green thing that was eating up demand through 2021 and then shrunk?
Indeed.
I feel like the
green thing is kind of weird.
Is going way down right now.
Okay, Tom, you want to
Tom, give us a hint? Can you give us a hint?
You are correct. It is something related to the Bitcoin ecosystem or related to Bitcoin.
Okay. Yeah,
what about wrapped Bitcoin, wrapped BTC type
wrapped
things?
BTC.
Ooh, that's an interesting guess. I don't think there's 300. There might be 300,000.
No, there were more.
Yeah, a wrapped BTC could have been. It might have been more, but like
maybe Ren BTC.
No, they never got that high. 300,000 Bitcoin is a lot of Bitcoin. So
yeah, okay. All right, Tom. Next hint.
I don't think I can give another hint because I feel like that was a pretty big hint.
I'm tapped. What is it?
Yeah, what's the answer?
Boom. It is
BTC
Bitcoin on Ethereum.
So we were right there.
Yeah.
All right. So WBTC plus Ren BTC plus everything. Okay, so it's like wrapped Bitcoin
Plus
or like
HBTC. Do not forget HBTC.
Also, the WBTC numbers off ETH are sort of messed up post FTX, right? Because they minted a bunch of stuff that wasn't collateralized.
No, that was solid stuff. Yeah. So
that
that's
was
not
solid. But the weird thing is the solid and WBTC pools were sort of like drained to zero also. So it got a little dicey on
interesting.
Right around the
Good chart.
That one was good.
Yeah. Well, okay, that's solid.
I was also about to be like did Dune index Lightning? No way.
Yeah, actually, now that you say that, I'm like, it doesn't seem like that would be an easy thing for Dune to index.
I don't think they have Lightning, but they do have just general Bitcoin data now. So if you want to look at ordinal stuff.
Yeah. Oh, that's right. There were ordinals.
Well, I'm actually most interested in the fact that chart has basically halved in like the past year or so. There's a lot of BTC that was on Ethereum that is no longer on Ethereum, which is probably the most interesting takeaway.
Yeah, where did that BTC go? Just back to Bitcoin?
FTX, for sure. Alameda, SBF.
I don't think it's half of the outstanding Bitcoin.
That was a joke.
Alameda. Okay.
Yeah. Because it peaked in April 2022 or May 2022.
Oh.
And then it was HBTC is basically nothing now. And then WBTC also fell quite a bit.
It must be tied to lenders in some way.
Yeah.
Like a lot of the lenders probably had to, like a lot of the lenders were using this stuff to get yield on Bitcoin.
Well, yeah, exactly. They were farming on your behalf.
Exactly.
You could probably go check too, right? Because the WBTC redemptions are on chain. You can just see who's redeeming it.
That probably was Celsius and FTX and
Genesis, BlockFi, all those guys who were finding ways to get yield with their BTC.
The dinosaur graveyard of.
Indeed. Yeah, it's very sad. How do any of you guys know, like, is lending making a comeback? Are people like putting their boots on again and facing the world, or is lending just like kind of dead?
Centralized lending?
Centralized lending, yeah.
Yeah, that dead. DeFi lending is going up a little bit because of staked ETH.
Yeah.
Interesting. I would think that, like, okay, there's like an extinction level event. There's no more yield anywhere. Like, now it feels like a time that like somebody should come in and start cleaning up and like just offering like fairly low rates, pocketing big spreads. You know, like just the lack of competition seems like it'd be a great time for somebody to come into the lending space. Why isn't that happening? And also like, okay, yeah, the risk-free rate on dollars is high, but like the rate on crypto assets is low. So like,
well,
it shouldn't be
I guess one of the things that would make it hard for a centralized lender is the fact that like right now, borrowing costs in DeFi are like hilariously low. It's cheaper to borrow in DeFi than it is. And you like borrowing costs in DeFi are below the Fed funds rate. Like it literally violates a lot of the laws of like financial physics.
Yeah, I think you basically need rates to go down a bit.
I've actually been thinking about this recently, Robert. To your point, there are hundreds of millions or billions of dollars in USDC sitting in Aave and Compound earning 1.5%. Are these people who are using these as collateral? Are these people USDC that's stuck? Like, why is this here?
Yeah, it's a great question. So, I mean, there is so many stablecoins earning so little in DeFi. I think the reason it's there is because it's better than bridging it back to TradFi to get 4.7% or 4.1% on your Apple account or whatever, is in the headlines lately, because it takes days to go back and forth typically. And people want to have their stablecoins available to buy the dip or like invest in crypto. Like they don't actually want to leave the crypto asset purchasing ecosystem because crypto is still so volatile that if you can buy crypto, and sell it for 1% higher, that's more money than you're expecting to make off of rates anyway. And like you have all these people like buying and selling crypto and just having it so readily available to take advantage of today Ether dropped 6%, right? That's more than a year of interest, for someone who was in stables and was able to buy it and is looking to sell it higher. Like just in terms of that, like human market making, the expected returns are probably higher than the difficulty of like moving into TradFi, missing an opportunity, whatever. Like if you have stables, it's because you like crypto. You like crypto assets. You like to be able to trade in them and participate in them and all of these things. And it's like, it still is super high friction to move it back to TradFi and back to crypto. And so there's a glut of stablecoins in crypto that earn way, way less than the risk-free rate. And I think people are mostly okay with that, where they're saying, hey, I'll just earn 1% or 2%. Because I know I can just turn it into Ether and Bitcoin, in a second's notice, in one block if I need to. And that's like extremely valuable. And the reason why they're not bringing it out of crypto.
One funny thing, right, is like we're pretty close to the all-time high, actually, of total stablecoins, right?
Yeah, it's like 118 billion right now, I think.
Yeah, 131 according to DeFi Llama.
Pull up the DeFi Llama chart, Tom.
Yeah, this one, the DeFi Llama stablecoin chart's actually kind of. I mean, you can just see Tether completely crushing it. Like that's the number one thing here. You just see like Tether and USDC going in like complete opposite directions at the end. Yeah, because like it's crazy. Tether's near its all-time high. It's like not very far from its all-time. It's only a couple of $1 billion away.
Yeah, and USDC is quite far from its all-time high. It's about half of its all-time high.
The other interesting thing is that there seems to be a pretty perfect substitution effect. Is that like the the pie seems to be fixed of demand for stablecoins, or at least at any given moment in time. And so when one's going up, the other's going down. It doesn't ever seem like they're that correlated, except when the whole market's going up.
Yeah.
Mouse over April 22, 1 year ago. What was the total stablecoins a year ago? Because there's 131 now. Let's add these up in our head real quick. It's like 160.
175, yeah.
Yeah, 175.
Yeah.
So it's not down that much in compared to say like BTC and ETH being down 50%.
Yeah. Yeah.
Don't have to do math anymore. Look at that.
Oh wow, we were off. Okay. It's 200 billion. So it's down about what, like
No, market cap, not TBL, yeah.
Oh, market cap, sorry.
Because like, did they include UST? That's sort of one of the weird parts of the data.
Oh yeah, Terra, but
do we count UST?
I'm guessing they did.
Yeah, I just don't know whether don't know whether
we go back to the non-aggregated, it'll show.
It does show USTC, which is UST Classic, which is I guess the successor.
Yeah. Look, it's 16 bill right there. Yeah.
Yeah.
Wow.
Yeah.
Dramatic.
Okay. All right. So if you ignore that 16 billion, it's still down. April 22.
April
was 187, and then now we're at 131. So it's down 20 bill, something like that.
Yeah, minus.
But that's still
UST.
Not crazy, right? Like it was down a lot more. Yeah, it definitely feels like it's not so crazy.
Yeah, actually, it looks like right when Terra collapsed was the all-time high for stablecoin and market cap, the total circulating supply, and since then it's been like pretty stable after, I mean, it's gone down. It's like kind of trickled down
It's
like
trickling
another
down every month.
20 million. Yeah. But very slightly.
Yeah.
But not a very significant drawdown. I was just looking this up. You were talking, Robbie, you were talking about like the risk-free rate and like the ability to instantaneously transfer stablecoins in and out. I was just looking at what are the rates that big banks are paying on cash deposits as kind of the analogy of like, okay, you can instantly turn, you get the optionality. Chase is paying 0.02% APY on cash right now. So actually, like if you consider stablecoins to be cash, then actually they're getting higher yield than a bank account still.
That's
Now,
true.
Chase might be unique.
Anyone with access to a brokerage account can get higher yield.
Yeah.
Yes, which is why right now commercial bank deposits are kind of flying out.
Yeah. And it's why the profitability of the biggest banks like JPM should be going up, unfortunately.
Yes. According to FDIC, the average APY across banks nationally is about 30 bips.
That's so pathetic.
That's crazy. Yeah.
Yeah. Well,
It turns out USDC is actually pretty good for being like a instantaneous cash account.
when do you think we'll be talking about tokenized treasuries over tokenized stablecoins, or like something that's like close to off-chain yield?
I mean, I think over the next 2 years, some incredible things are going to come to market that change how we think about tokenized dollars versus tokenized yield, right? I think it just needs to like find a clear regulatory framework.
I think the issue with real world assets, broadly speaking, this is like super kind of 1,000-foot view, is that when we started, like, I mean, I remember when I first got into crypto, people used to talk about real world assets all the time. And that was like 2017, 2018, right? It was a big narrative. And that's 6 years ago now. Geez. At that time, like, I remember when people were tokenizing like apartment complexes and they were putting them on the blockchain and being like, why isn't anyone buying my like Miami apartment complex? And the reality is like, people like found these like very random things that were totally illiquid and very hard to value and had a lot of local knowledge, and were annoyed that like, okay, I brought this thing on chain, I did all the legal work, and like, why isn't it magically liquid now? So I think people had this mental model that like blockchains magically make things liquid, which is obviously bullshit. Like that's not, there's nothing magic about tokenization that makes illiquid things liquid. And I think as a result, like the order of operations through which blockchains approach real world assets was kind of inverted. We started with the most illiquid, hard to value things that very few people want to own, like a specific piece of real estate in a specific apartment complex or whatever, as opposed to like treasuries, right? Treasuries are the biggest market in the world, they're the biggest asset in the world, huge amounts of demand. Nobody has trouble underwriting treasuries, but they haven't existed on the blockchain basically at all for the last like 5 years. Now, a big part of the reason for that was that yields on treasuries were terrible, right? They were basically 25 basis points for the longest time. And when on-chain yields were dramatic, who cares? Why would you want to bring treasuries on chain? Now it feels like that's reversing, right? There's now clearly more demand for treasuries on chain. There are a few projects that are doing it, and there's a lot of, you're seeing a lot of on-chain growth in the demand for treasuries. But the more importantly, I think it's like it shows that we're now thinking in the right order of operations about what kinds of real world assets need to build on chain and in what sequence they should be tokenized, as opposed to starting with a PE fund or some random piece of real estate or some other random thing that nobody else wants and nobody else knows even what it is, starting with the biggest and most liquid assets and bring them on chain and following that sequence of optionality such that, eventually the marginal investor who's living in some random country around the world, it's like, oh, okay, great, treasuries, I know what that is. I can see why I'd want that as part of my portfolio. And then I might want this other thing and this other thing and this other thing. And you get this menu forming in a sensible way that builds up this impression of like, hey, I can go on chain and I can buy the kinds of assets that I understand and care about as part of a sound financial portfolio, as opposed to I go on chain and I can find dollars and then really random stuff that like some random entrepreneur decided they wanted to tokenize, and then basically, the crypto casino.
And in between we have NFTs, which I think are a really fun approximation of assets that are semi-liquid on chain.
Yeah.
Well, we'll soon have the WorldCoin orb identities.
When are they coming on chain?
I think they are on their own L2 right now, right? But is it POA? I think it's POA though. I think the goal is they'll be posted.
Wait, they're on an L2 that's POA. Then how's it an L2?
Well, there's a plan to convert it.
Okay,
It's not like. Yeah.
I see.
You know what's funny? Like we haven't used the phrase POA in like years. Like I feel like it was like a phrase from like 2017. But in a lot of ways, like a lot of the L2s are kind of POA. Just we don't use that phrase anymore.
I think the term L2 is a little bit aspirational at this point, right? It's like L2 kind of means like we have the goal of no longer being a multi-sig at some point. But like basically pretty much all of these L2s, deep down somewhere, there's a multi-sig, and the multi-sig basically, if they wanted to, they could control it, whether it's like controlling the fraud proofs and like the fraud proofs are whitelisted, or the code can be upgraded, or there are no fraud proofs and they create the optimism stack, or these ZK rollups are all obviously super experimental, so everything is super protected. The reality is like today, L2 is more like the destination as opposed to a description of the present.
Well, I agree, but that's because I think it's technically extremely challenging to decentralize them fully safely, right? For all the different reasons.
For sure. Yes.
Right.
To be clear, I think it's correct that they're this way. I don't think they should skip a step.
If we go back to our first chart, I mean, the question really is like, is that amount of revenue that has to be spent going to worth decentralizing, right? Like,
well,
there's some sense in like, yeah.
You missed the second chart, which was the profit, the delta between the fees that they're charging people and what they're paying to settle. And so, some of them are making like 1,000 ETH per month on the spread. So like that is pretty attractive. But it's also like going back to the POA thing. It's like, it's there are levels to security. I think this stuff is all obviously better than like any sort of POA network, and it's really what you're risking is the difference between from the last proof that was posted on chain. So it's like okay, sure, it's not ideal, but like we're getting there. It's iterative.
By the way, for those who don't know, POA means proof of authority, which basically means a multi-sig, more or less.
Yeah, it means you have the keys.
But I will say there have been some successful chains that have transitioned from POA to their own chains, like Gnosis chain, which started as XDAI, which was POA, but now you can run a Gnosis chain validator. So
yeah, I've been wanting to write a blog post about this, and I've been caught up with a bunch of stuff, but I'm going to write eventually. But I want to get your guys' take on this in real time as I think through this thesis. So I feel like over the last 6 months, so we've been, so we invested into ZK Sync. We've been, big bulls of layer 2s generally. But I feel like lately the conversation has become, and I see this more and more, especially among like the kind of crypto intelligentsia, that like layer 1s are basically irrelevant now because, or alt L1s. Alt L1s are basically irrelevant now because we have the rollups, the promised land is here. We can finally get off this like intermediate step or like this ship that we were using to get onto the beautiful, promised land of rollups. And I guess my thesis is something on the lines of like the alt L1s are still really important and they're not going to go away. And I think they actually still have some structural advantages over L2s. So before I go into like why I think that, I'm curious just to get your gut level reaction. Or do you think, especially the EVM based alt L1s, do you think they're like basically done once the layer 2s are like fully feature complete?
Well, I actually think the alt L1s are long-term more useful and more valuable than the L2s potentially. Because
okay, interesting. Why?
And maybe I'm tripping and like we didn't talk about this on like the last episode, or like I'm just imagining this, or maybe we did talk about this in the last episode, or maybe this was a conversation I just had with some crypto people like on the streets of Brooklyn or something. But all the L2s are just EVM chains. And when it comes to being an application developer, even if there's 100 L2s, they're not really offering you any new capabilities that you don't already have for launching an application. And I give kudos to the alt L1s that are actually like providing different capabilities to application writers, mostly through choice of language or tech specs or whatever. But like Solana legitimately offers something different than Ethereum. Avalanche offers something different than Ethereum. Polkadot offers something different than Ethereum. All the L2s offer basically the same thing. And every L2 offers basically the same thing as every other L2. Even if you have 400 of them, it doesn't really fundamentally change the toolkit available to application developers. And at the end of the day, the whole point of all of these platforms is to enable applications to be built on top of them. And so I think all the different alt L1s are more useful in that they offer different like tools to developers that L2s don't. And so I don't think having 100 different EVM chains is the promised land. Like 100 different EVM chains in my mind is almost exactly the same or is equally as good as having like one EVM chain. I think it's a lot of wasted effort and a lot of wasted resources as a society. And I think there's so much more value that comes from totally different approaches that get tried than having yet another L2, which I think adds fundamentally nothing.
So I would say that another interesting fact is that, a little bit like Ethereum last bear market, where the Bitcoin maxis were constantly hounding them, but the developers were like dug their toes in and were like, fuck you, we're still going to keep building things here. I feel like Solana does have that, and no other L1 does have that, where there's this community of people who are like they're like almost like a cult in belief on the developer side, because like we believe in
Cosmos
these particular attributes. Cosmos has that, but everyone in Cosmos likes to cut each other. Like it's a knife fight constantly. A. B, anytime someone is like, hey, how do I make something easier for a user? Oh, guess what? Make another Cosmos chain and add another token. It's like the equivalent of that, the XKCD, the comic on standards and technology. Like, hey, we have 15 standards. I'm going to make one that rules them all. Okay, now we have 16 standards. And like Cosmos has that problem like inherently in a way that I think is difficult. People are definitely working on trying to homogenize things, but I think, sovereignty comes at a cost. Solana is actually weirdly, the developer community is so adamant there in like a way that reminds me of Ethereum developers at the bottom of the last bear market.
Which is good.
Yeah, I think that's honestly true for any chain. Like you're talking about like legit chains or like legit communities and legit developers, but like go down CoinGecko and choose any random like 2017 era L1 and like, dude, there will be people in the Discord, in the Telegram, on the Reddit hyped about the chain for some particular reason. And it's sort of like a, religious in some way. And like, it's not just number go up. People talk about like applications and like there are random devs, people who get like married to like a particular like chain ideology in the same way. Like, I just think they don't with like a, L2. Maybe on a tangent from this topic, but something I was been thinking about is like, it seems like to your point around these layer 2s as a service or like stuff like Base popping up, they kind of get co-promoted or like heralded by sort of like the chain, like Optimism, but these feel very cannibalistic, right? Like now Optimism has to, or any layer 2 basically has to make an argument as to why they, why you need to sort of co-locate on their chain with the other apps versus like running your own, fork of it. And that seems like a harder case to make over time.
Or building on Base for that matter, right? Isn't Base like directly cannibalistic from Optimism? I mean, it's quite zero sum, right? Like they're the same damn stack, but one of them has Coinbase distribution and one of them has like OP token.
Yes, I'd be pissed if I was Optimism.
Clearly they're not.
But they're not.
I don't think they're not. They definitely are not.
Yeah, they're clearly celebrating this. I mean, I think it's not obvious. And the other thing too, like I think in a lot of these cases, the token, at least in the short term, it's kind of a meme token, right? Like obviously the fees for these layer 2s, I mean, except for like like you said, the sort of the spread between the fees on chain and the call data they have to actually post, it's reasonable. What, like 20 million a year run rate or something like that? It's like not a crazy amount of money, but it's like not nothing.
That's pretty good.
But it's obviously not worth like 10 billion FTV. So take Atom, for example, right? Like Atom, obviously there is de minimis value going through the Cosmos hub, which is what the Atom token actually
Atom
is
is Dogecoin for nerds.
Yes,
it has no utility
the meme token for the
other
Cosmos
than stroking
ecosystem.
Jaquan's ego. Other than Jaquan stroking his ego with it, there's really nothing else.
Just for a lot of these things, it is just the model, right? So I think like for OP token, I don't know that there was a rational reason why like when Base launched, OP token should go up when Base and the Optimism, whatever it's called, like the Optimism canonical distro, I don't know what your chain, whatever you'd call it. Like clearly these are in competition with each other and they use the same stack. And you're going to deploy on one, you're going to deploy on the other. Base did say, well, we're going to give some of the fees to the Optimism Collective or whatever, but then they walked back how many fees they were going to give. And like, obviously they're not going to give the majority of the fees because it's their chain and they can change it at any time they want because it's up to them unless there's some contract, which would be kind of weird. So end of the day, and obviously they could always change, right? Like if there's going to be an alternative layer 2 stack that is open source and is totally license free, and they're like, oh, Optimism wants to extract more rent from you, Coinbase can be like, okay, well, never mind, Optimism. We'll like switch and do some regenesis or something, and we'll create a transition plan. to go to something else where somebody else gets the fees. So I just don't know. In the short term, I think nobody cares. In the short term, it's all meme warfare, and maybe appropriately so. Maybe it's right for them to think about it as meme warfare. But I don't think the market's thinking about it this way, because clearly when base launched, that was considered to be super bullish for optimism, despite the fact that now, okay, there's a third competitor on the layer 2 space.
Well, I don't think the market thinks that much in general in crypto. Like, I don't think we have these like extremely rational markets where, there's fundamental analysis done on all the different.
Arguably, Base not launching with a token, though, is very positive for OP in the sense of securities stuff.
What? No, I mean, it's going to be, Coinbase runs a sequencer and the revenue goes to Coinbase Inc. Like, I don't think that's complicated.
Well, I think Tarun's point is also a good one, is that the demand for investing into layer 2s, there's only really today 2 tokens you can invest in, Arbitrum and Optimism. And if Base had a token, there would be a third. And I think that's a simple enough analysis to be correct, that was good for Optimism, that Base did not launch a token.
It's just buying BNB in late 2020. OP is the proxy, for better or worse.
It's
a 30 IQ move, but I am agreeing with the thesis that Haseeb was. I don't really have a strong view on that thesis, but I will say I think that's the logic. People's the left curve logic is literally what I just.
Right.
Yeah.
Well, there's no token, so they'll use OP. But like,
so I obviously none of us are traders, as far as I know. Or, Robert, you consider yourself a trader? I feel like you're the most active. No. In markets of any of us.
No,
okay.
I am not active at all. I am not a trader.
Okay. So none of us are traders. So to be clear, we're all totally incompetent at making these kinds of evaluations. But
yeah, nothing here is investment advice because we all suck.
Obviously, nothing investment advice because we're all terrible at investing in short-term trades. But I will say the longer I've been in crypto, the more that I've learned that the obvious thing is usually right. That's just like the number one piece of advice that I give to everybody in crypto.
Yeah, Ape token is trading at 4 billion FTV. It's
Hey, they're going to ship a metaverse.
Ape is necessary to power the ecosystem.
I'd be bullish if they launched an Optimism fork.
Yeah, well, Ape is essential for the future.
When is Ape going to launch their own layer 2? Okay, I think we've technically hit an hour. This was a very experimental show. It's also very late at night, so I hope you're feeling the late night chill vibes. Let's go ahead and sign off. I think next week we will do something a little more sensible than this, but I hope that this was coming at you with a slightly different flavor of the chopping block. To be clear, this is what we used to do. Back when we were doing before the chopping block was a thing, we used to do Twitter spaces. That was like the Robot Ventures, Dragonfly, what was it, happy hours? Like Friday happy hours? And we would just talk about random stuff. And this was the vibe.
Yeah, we'd have a beer and just,
Exactly. And then now we've gotten so professionalized and we have an agenda and we talk about the news.
We thought we were going to talk about Gary Gensler. And we didn't.
Gary Gensler, see, we're always mixing up here at the chopping block. That's what the show's all about, keeping you guessing. Okay, that's it. Tarun, I hope your food has gotten here. I hope it's not too cold. What'd you order, by the way?
I think it turkey burger.
Turkey burger? That's very healthy.
Sure.
We're not editing this out. We're going to keep in. Tarun gets the turkey
That's what
burger.
you would say. If you ordered 2 pizzas, you'd be like, oh, I got a turkey burger.
Look, Zuko's not listening, Okay. Do you remember how Zuko was a big meatitarian and was always protein eating?
He's a carnivore, right?
Yeah. But I feel like turkey burger is a cheap, something people don't respect as much.
Tarun, that is a very feminized meal. Is a turkey burger. I can't believe you would.
You don't respect it.
I love it.
You're showing hate.
All right. Signing off. Thanks, everyone.
Tune in next week.